Coca Cola İçecek, also known as CCI, is a Turkish Coke Bottler that operates in 11 countries with more than 10,000 workers and over 430 million customers. The countries they operate in are all developing countries like Turkey, Pakistan and Azerbaijan. In the last 12 months, they made 8.7 billion liras, and if we use the exchange rate at the end of every quarter, their profit in dollar terms is $353 million. Their market cap is currently a little over 100 billion liras, so their PE is around 12. But dollar against lira is up over 54% in the last year. So I think comparing their dollar earnings at the end of each quarter against their market cap in dollar is a better way to go. Their trailing 12 months earnings with the exchange rate at the end of each quarter, as I said, is $353 million, and their market cap is a little over $3.5 billion. So their real PE is closer to 10 in my opinion. Last time I covered this business, it was in mid-single digits. So there has been a multiple appreciation in the last year along with the earnings growth. Last year, the earnings were down slightly year over year, but this year, they have grown their earnings 17% in the first quarter, 18% in the second quarter, and 57% in the third quarter so far. Now, let's look at the Coca Cola Corporation. First of all, I want to say that I am not claiming an investment in Coca Cola Corp itself is a bad investment at all. Buffett still owns it, and the business has one of the strongest, if not the strongest moat the world has ever seen. I just want to compare an investment in Coca Cola against Coca Cola İçecek. Coca Cola's current multiple is a little over 23, so more than double of Coca Cola İçecek. Obviously, the Coca Cola Corporation is a much lower risk investment, and you can easily justify a higher multiple for it. But in this case, the difference between multiples, in my opinion, are pretty wide. And keep in mind that while Coca Cola Corp gets a share from every bottle of Coke sold worldwide, Coca Cola İçecek is only operating in 11 countries. But those 11 countries, in my opinion, will be much better business environments for Coca Cola İçecek. Under normal circumstances, their population growth, GDP growth, and Coke consumption are all expected to increase faster compared than the average. And the reason I expect the consumption of Coke to increase faster in those countries is that when your GDP per capita goes from $20,000 to $30,000, the consumption of luxury products can increase faster. But when it goes from just a couple of $1,000s to, let's say, $10,000 range, the consumption of more basic products like Coca-Cola increases faster. At least that is the logical thing to expect. Also, keep in mind that the rights to bottle Coca-Cola products are a monopoly that Coca Cola İçecek owns in those 11 countries, and Coca Cola Corporation also owns 20% of Coca Cola İçecek. They also have board members there as well, so there is a symbiotic relationship there. I think the main reason that CCI is trading at low valuations is that it is trading in the Turkish stock market, and we will be coming back to that at the end of the video. Now, let's take a quick look at their balance sheet. Their current assets are 50 billion liras, and their total liabilities are 58 billion liras, so they can cover 84% of their total liabilities with just their current assets. A quick note here, they used to own only half of the bottling business in Pakistan, but now they bought the remaining half from a Pakistani company for $300 million, and KPMG valued the total business between 553 million to 655 million, and since the valuation was done by a Big Four company, I think the price they paid was fair. We will see the effects of this deal on the balance sheet, but I think it looks great. And with the extra cash flow from the bottling business in Pakistan, their balance sheet will remain stellar in my opinion. Also, Fitch gave them a stable credit rating, and it also says that CCI's rating also benefits from a strategic support from the Coca-Cola company as per Fitch's parent and subsidiary linkage criteria. I think it is also important to mention that Mohnish once said that CCI was the most Western company he has seen in Turkey. If you read their annual reports, they care hugely about sustainability, equality, and those kinds of matters. I also think that their corporate governance is one of the best, if not the best, in Turkey. Speaking of Mohnish, he owns Coca Cola İçecek, but through another company, just like he owns Tencent through Process. There is another company in Turkey called Anadolu Efes. They are a Turkish brewery operator specializing in the production of beer, but they also own the majority shares of CCI with 50.3% ownership. We know that Anadolu Efes is one of the 3 holdings Pabrai has in Turkey, and it has a 9.8% weight in the new Pabrai Vegans Fund. So clearly, Pabrai likes Efes and CCI. And if you are watching this video, you most likely have heard Pabrai talk about Turkey and how he looks for companies with an income stream of euros or dollars. And looking at CCI, only 38% of their volume 36% of their total revenue and 28% of their EBITDA is coming from Turkey. The rest are international. Also, I will be covering Anadolu Efes in the channel, so make sure to subscribe and hit the bell so you won't miss it. And for clarification, I am a shareholder in Anadolu Efes, but I have no position in CCI directly. Now, before we close, I saw a comparison on Twitter made by Benji Graham. He compared 3 Coke bottlers around the world. The numbers are all rounded up, and the earnings numbers are from 2022. But as we saw earlier, CCI's trailing 12 months earnings using the exchange rate at the end of each quarter is $353 million. The companies here are Coca Cola Andina, the Coke bottler mainly operating in South America, Varun Beverages, the Pepsi bottler operating in mainly India and some African countries, and finally CCI. As you can see, from an earnings growth perspective, Coca Cola Andina is the worst here. They have basically no growth. Varun Beverages, however, look awesome, and the countries they operate in are at least as good as CCI in terms of growth perspectives. They went from $40 million of net income in 2018 to $180 million in 2022. Their earnings growth this year was around 33%, so I will just assume their earnings for 2023 to be in the $240 million range. Keep in mind that CCI's earnings for the same period should be around $353 million range. And keep in mind that these are all my subjective guesses, but I think that Varun's growth perspectives look only slightly better compared to CCI. Now, with all that in mind, when we compare the market caps of these two businesses, Varun is currently trading at a market cap of $16.65 billion, while CCI is trading at $3.56 billion. So, while CCI looks very cheap, I think there is even a cheaper way to buy into CCI, with Efes, and I will be covering Efes in my new video. If you like this video, please leave a like, subscribe, and share it on your social media if you can. And until next time, bye.